All right, team, are you guys ready for another day right here? Time to wrap up the week, and wouldn't you know it, some high short interest stocks start to rock it off. Ford and Tesla in the news together. A little bit of teamwork coming in here. DocuSign beats on EPS and sales. We'll talk all about it. Adobe, we've been talking about it. Looks like it's continuing strong here. Citigroup going after a target. We'll talk a little bit about that. Maybe we'll get into Braze. But of course, we got our guest today, Ryan Detrick, CarsonGroup. Excited to get into that. You guys smash the like. Are you guys ready to wrap up the week? It's time to rise and shine, traders. It's time to see if maybe we can end the week with a good little run here. Can we get to 430 on the SPY? Hit the like button. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, team, let's get it started. Let's take a look at what's going on right now. Of course, we can take a look at the SPY and see that right now we're just kind of going sideways. Sideways? What? Us going sideways? Can you believe it, guys? We'll take a look at the TLT. The TLT still kind of falling off. Will we find bottoming around the 100s? Things that I'm thinking about. And of course, we'll take a look at what happened in crude yesterday. Definitely saw a little bit of a drop off. Now we're bouncing back. Will we recover the 72? Yesterday, getting even into the 69 handle on WTI. And then, of course, I'll keep my eye on gold and other stocks. But let's go ahead. Let's just bring on my man, Dennis Dick. Let's talk about the markets like always. It's good to have you this morning. How we doing, Dennis?
I'm here. I'm back. I brought my friend with me. Look, I brought my friend with me.
Oh, you brought your friend? Look, this is a volatile puppy, isn't it?
We were missing him. Everybody was missing him. So I was like, we got to bring him back on the show.
Yes.
So
Even though Joel is gone, he's always with us, right?
He's always kind of with us.
Yeah, he'll be back. Leaving. No worries, guys. He'll be back on Monday. You guys smash the like. Let's keep it going. We'll see what's going on in this market. The first conversation I have today, of course, is what's up with these high short interest stocks rocketing off, Dennis? I think, we were talking about it. Would we go looking into the kind of the dumpsters, looking at those stocks? I called them kind of, like the zombie stocks that were burning. But hey, zombies come back alive, don't they? And look at that. Carvana getting a little bit of a lift, and definitely a big candle day yesterday. Look at that. Nice little push higher through this high here, 1987, really kind of holding on to there. Now taking off through the 20s. You also saw Beyond Meat kind of give a lift, right? Yeah. There was Upstart that gave the lift. Also Affirm, a nice little push higher. So what do you think about these stocks? Can you think
I think a lot of the retail still goes to this site, highshortinterest.com. So we've talked about this site before, the number one stock on the list. And I don't know how quickly it updates. I don't know much about the site, but I know there's a lot of retail traders that use it. And if that's the case, when they start to go into these short squeeze modes, stocks on these lists can go. The number one stock on the list is Carvana. It says it's got a 57.22% short interest. We know what's been happening with that. It's been getting, the squeeze big time here. Beyond Meat is number 3, which you just talked about. It had a huge day yesterday too. Upstart's number 5, I think, on the list, or 6 on the list, and it had a big squeeze yesterday as well. So we are seeing some stock squeeze on the list. W was going up here. I'm just kind of, just cherry picking some of the ones that have went. Definitely not all of them have went on this list. There's obviously, some of these lower ones that, Kohl's is actually right at the bottom of the list. I guess it's kind of been, going up here too, though, a little bit lately. So they definitely are looking, now, and this is what usually happens. They get this huge rally, and then eventually they start grabbing the short squeeze stocks, and then those go too. And then usually the rally fizzles out. It's usually how the cycle goes. So they're right now in the squeeze mode. Anybody who's short anything is panicking, and this is a list that they look at. So I'm just looking at the other ones on the list. Novavax is one that's on the list here, number 5 on their list. Can you show this list, Mitch?
Yeah, I can do it.
Yeah, highshortinterest.com. We're giving them some little publicity here today.
Why not, right? I mean,
yeah, just so you can see what I'm actually
use
reading
it.
here.
We take a look at it. Might as well look underneath the hood, right?
Yeah, so here's what I'm just reading.
Let me zoom in
and
a little
again,
bit.
I don't know who runs this site. I don't know anything about this. All I know is during, the big squeezes, people were talking about this site. So I think they still do go to this site.
What is this?
And look,
at the top?
we're right there on the top of it. That's why we like this site. Look, like boom, right there, Benzinga Pro.
All right,
powered by Benzinga Pro.
Of course, you see Carvana.
we love our affiliates.
Names like this. Ooh,
Novavax is interesting.
Frisky Fisker is showing up on here. What's that doing?
That was a fun one. I don't know. I haven't been in it a long time. And maybe, this is one I thought that could maybe not be a zero, but I don't know. Maybe it is.
This one's on the list, and I have been seeing this one making a move. NVIS. So that one's been making a little miss.
Microvision. Oh, yeah. That one's been flying for a while here now.
Yeah. High short interest, man. And what about Big Lots? Is Big Lots going to make a surprising move?
I wouldn't want to be short it right now. I mean, this is where the dogs are barking here right now. So you got to be careful with what you're short. And these high short interest names we know are prone to squeezes now and then. Not all the time, but now and then. So is this the time? Well, we're in this, really, running up market here right now. So if there was ever a time, it probably is the time now. The one sleepy one that I'm looking at, I don't have a position in, is Novavax. Because I think Novavax is still going down long term. I've said on this show, I think it's a zero. But so you could always get caught with bad news. You get caught with other things. But it's sleepy here right now. And we say anything, could be, put on for a trade. I see that little top right here. I see a little hook happening. I see the stabilization. It's kind of got what we like in the technicals, except it's Novavax. And I just hate this company. The stock looks a little sleepy here, though. So if you're going into squeeze mode, keep an eye on that one, NVAX. Don't get stuck with this one, though, because I think long term this goes lower.
Yeah, we got to be watching on that one. I think that one's a clear one that the chart speaks for itself. And even then, would I want to go shorting this stock now? It's at $7.
I ain't shorting anything. And I as a rule of thumb, I don't usually like shorting stocks under $5. I do it sometimes, but once they start getting under $5, you just get these, one headline and boom, it's 7. It's like, oh my gosh, it's just, not enough meat on the bone at this point in time. But I trade mega caps. I trade the bigger stuff. I don't usually pick on the little stuff this much. So, we're just bringing up because we obviously saw some squeezes happening yesterday. So does the squeeze contagion spread? If it does, stocks in this highshortinterest.com list could potentially go higher. So one, if you're shorting those names, I'd be very cautious here right now. Two, obviously, we just got to, be aware that there's lots of different trading opportunities. And just because you hate a company doesn't mean you can't trade the stock short term from the long side.
All right, let's move forward. We're going to get to the second story, the biggest story, I think, of today. Let's go to it. And of course, a surprising partnership, I will say. And I will say that Ford and Tesla getting supercharged. Of course,
it's GM and Tesla.
GM and
Ford was like a week ago. So
it's already getting the move. GM, General Motors CEO here, Mary Barra, and Tesla's Elon Musk announcing a partnership where General Motors and Ford will utilize Tesla's North American charging network here. And you guys see General Motors getting the lift, Tesla getting the lift, and Tesla's in straight kind of rocket mode here, as it's definitely made a huge move from that kind of bottoming action around from May 1st to where we are now. This is a 63% run, 63.5. Since that interview, 63%, man. What a move.
It put the Tesla right back into the AI column, and they have not stopped buying it since. And I keep thinking it's going to get a pullback here, but none to be had. And now he's just smart. I mean, this is a good move for Tesla. Let's be honest here. Their charging stations, they're going to be using their charging stations, because think about all the competition and all the charging stations. Like, don't do that. Use our charging stations. And he gets GM and Ford on board. I mean, this is just, Elon Musk is just a genius. He's probably, the CEO that runs the company is the best. Everything he's done is just incredible. Again, valuation, it keeps me out from the long-term perspective, but short-term, I mean, it's popping 6%. I think it's deserved. do we eventually have the capitulation event, upside capitulation, where eventually get the pullback here? You keep waiting for it and pulls back $3-4 and then just goes another 10 every day. Tesla's been up, I think 2 days ago, maybe it broke the streak, but it was up like 6 or 7 days in a row before that. General Motors, I'm long General Motors. I've been long here for a couple of weeks. I was just a little hook, the 32 level. I actually got it near the bottom. I think I paid around 33 maybe. So it's going okay. I think it's better news for Tesla than GM, though, because, it's, one thing to think about that. They're EVs, GM, Ford. Now they can just go charge up at a Tesla station. That's important for the network. It's also bad for those charging station plays like ChargePoint. Got to think that's getting hit, which it is, down 5%. There's also EVGO, which is another one. It's down 6%. BLNK, I was short this one. I covered it, though, just because I actually wanted to talk about it on the show. Blink charging here. BLNK is another one as well. So multiple charging stations. I think the trade's kind of, I don't know if it's going to get follow through here or not, but it's definitely not good news for these companies.
Definitely not good news. And I mean, we were looking to see if these were going to turn around. ChargePoint was actually kind of looking at kind of getting towards a longer trend line. I was looking to see if, we were going to start kind of making a way up through 10. I think even you can see it on this chart. Like, let's just make it as simple as that. Look,
sure.
This is what I'm looking at, right? And it looks like an ugly chart, but the truth is that if it could just get out of this trend, maybe it could reverse. I see the bottoming action there, but the truth is, if Tesla's going to be the only one that
the bottoming action is at 0 on ChargePoint here, Mitch. That's what you're seeing.
All right.
I'd be scared to own these stocks now. I mean, they can turn, and maybe this is just another buying opportunity. Maybe they're not going away, and maybe ChargePoint's going to be a player here too. It's very possible, but this is not a good headline for them. This is not a good headline for any of these charging stations. Elon Musk is just getting involved in everything. Is he going to eventually buy a lithium company? That's what I think. There was the rumors, which was the lithium company, Chad, help me out here, that was rumored to be buying by Tesla about 3 months ago when all the lithium stocks went. It was a smaller player. Do you remember it, Mitch? Wasn't it start with S?
I have a lot going on today. I don't think
I'm long a couple lithium stocks. I'm long LTHM. You guys know that. I'm also long ALB. These were struggling for a bit, but now I actually think I'm up in both of them. ALB, I might be close to break even on that because my first buy was really bad. The second one was really good. LTHM has been doing really well for me. I picked it back up, I think, in the 22s, and it's up here at 26. Now, again, LTHM has that merger on the table, too. Standard Lithium, was that it? Yeah. Oh, no, Sigma, SGL, Zippity Doodah has got it. Sigma Lithium, SGML, Sigma Lithium. SGML was the rumor. How does it not come down? Was that the one? Was that the one? Sigma? I don't see the gap up in the chart, though.
Yeah. I think
was this the one for sure?
It was when it was in the 30s, and then it did a little gap to like 36.
Okay, yeah, maybe back there. I'm looking now in February, it looks like. So SGML. So it's continued to go higher here too. I still think the lithium plays are still solid. I think ALB trading 10 times earnings. Again, maybe inflated a little bit, but I just think the need for lithium is just not going away.
These stocks, I have a tendency, I've talked about this pattern all the time. When this happens, I usually look to see Tesla run. Once Tesla starts running, what do I start doing? I start moving down the auto manufacturers. Once the auto manufacturers start moving, I start looking at the lithium plays. Relationships, right? Keep an eye on it. I'm definitely watching stocks like this. Even LAC was on my radar yesterday. And you guys can see here, this chart looks pretty interesting to me. I see, a nice declining triangle here, nice little bottoming actions. And a lot of the times, what do I look for? I look for about 3 or 4 and then a reversal sign off the bottom. So here you guys see 1, 2, you guys see the third one. And once I see that, I'm looking for it to come down towards that level and reverse off of that. Because then at least I know my risk spot, right? And then I'm looking for it to now start coming back towards that trend line. So you can see recently we did this little 20 peak here. Will we start making our way back to 23 and to 24? So I'll keep this one on watch. Not a bad looking chart.
I don't mind that chart
LAC.
either here, Mitch. The LAC chart. It looks sleepy to me. I mean, you could argue the other way, head and shoulders. That's the funny thing with technicals. You can always argue both ways almost. But get above the 22, it starts to get interesting. Let's get above that neckline on that old head and shoulders above 22. This one has lagged though to a certain extent because ALB has been coming back. LTHM's come back a long ways. Again, they have a merger thing going. LAC has lagged a bit, but I think the lithium plays again. LTHM and ALB are profitable, making ALB making good money. So you know me, I like value. ALB's got some value. It's got the lithium story. That's why I'm still long it, although it hasn't been a good one for me. I'm almost back to even on it though.
Now I'm starting to think, Dennis, and yesterday we got a chat mention about it, and we talked about it. We're not the biggest fans of these companies like Lucid, but the truth is, if they all start popping and all manufacturers start popping, Ford, GM, Tesla, eventually I move down the line, Dennis. I just start looking down the line and looking to see if the money goes and flows, right? What hasn't gone in on the manufacturers. We just saw Fisker. We see high short interest. I'm gonna keep it on radar. I'm not saying anything.
It's on the list.
You just got to watch it, right? And just like a lot of times, we got to keep some stocks on our watch list and know the story, right? The story right now is, okay, the industry is getting hot. Tesla's taking the lead. Ford and GM are kind of following along. And if those can stay hot, sometimes the money just keeps moving down the line. So I'll be looking at stocks like even Lucid to maybe even get a pop.
Yeah, maybe EV catches a little bit of, they're talking about nonstop on CNBC. So maybe, it catches a little bit of it just from the media talking about these stocks.
Nope.
Lucid's right at the lows. Again, I've been on the books saying I'm not a big fan of Lucid. The only thing they have going for them is the Saudis have a huge amount of money in there. But $6.40, I'm like, holy mackerel. It's a new 52-week low. Stocks making new 52-week lows are not what you're looking for in this market. But there's definitely, the potential for some of these catch-up trades and some of these other names. Fisker, Sleepy. Is this the time to go in? Maybe for a trade. Again, there's just, this relentless downward and bag holders all over the place in here, which make these trades tough. I do think Fisker, I've said it before, I don't think Fisker's a zero. I think they're actually going to eventually be able to see Fisker's on the road and do this. But Henrik Fisker's a pretty smart guy too. But there's a lot of smart people running these companies, and they're not all going to make it.
All right. Well, I see multiple lows around the area of 554, 553, and just recently 556. So my man Joel would say that's a 3-star level. I wouldn't give it a 4-star. I hope he's out there and judging me right now. He's like, no, that's a 4-star.
What's he say? Joel, what do you say? What kind of level is this?
What kind of level is that, Joel?
Level. What's a level, Joel?
I think he said that's a volatile puppy, isn't it?
That's a volatile puppy. He said he stays away. That's a volatile puppy.
All right, let's keep going, guys. Let's go to DocU. Let's take a look at DocU.
I'll let Joel chime in a couple times on the show.
Another stock that got a nice little lift here off of earnings. I'll throw it in here. Q1 adjusted EPS here at 72 cents, beat the 56-cent estimate. Sales of 661.39 million, beat the 641.80 million estimate. DocuSign sees Q2 revenue 675 million to 679 million versus a 670.37 million estimate. Also looking at a decent look into the full year 24 revenue, pretty much in line with estimates.
I don't know. Like this feels like it's Zoom, DocuSign. These have their day. Zoom's starting to look a little bit perky, and then it starts to sell off. There's so many better plays than the one-trick ponies. Like DocuSign and Zoom are the one-trick ponies, meaning they got, we got our webcams, we do our meetings. DocuSign, we do it. Everybody uses it, and everybody does use it. I mean, DocuSign, I was signing some DocuSign 2 days ago. I mean, it was insurance. Everybody uses DocuSign. So that's the good news. The bad news is it's just like, where's the expansion come from? Where does it go from here? I mean, they need to figure out, they're signing documents. Well, where's the expansion story in signing documents? Once everybody's using it, which they are, what after that? Where is the new growth come from? Where is the eventual profitability on this thing come from? Is it profitable, Mitch?
I mean, the EPS doesn't look too bad.
Do they have a path? It is 72 cents. They make pretty good money.
72 cents. It doesn't look too bad, and they beat the estimate pretty good here. I think one thing that we got to keep in mind is I look for stocks to sometimes do this. It had its bubble moment, right? Of course, I'm not ever going to look at that 300 and think that, that's logical to think of. But one thing I would say is this has retraced all the way about 100% of the move. We were down here around 2018. And so it bounced around those levels. It was around 35. and it went down here. What we go down to, like about, I think the lows we got there about 45.39. So I think you're reversing a little bit of trend. Now, is this going back to 300? I don't think so. But can it make it maybe to 100? That's not a bad outlook with the way that I'm seeing growth stocks starting to move. So if I can keep seeing ARKK continue to climb that wall of worry, and an easy way for me, I can just put a trend line, right? And just be like, well, if it ever breaks here, I got to be careful about these growth stocks turning around. But if I can continue seeing these climb, DocuQ's on my list. I talked about it. Zoom even on my list. Roku already pushing. I was on my list.
It's been a good run for some of these stocks. So I will say this: if you're a believer in that we're still in a trading environment, which we probably are, you get up 7, 8, 10% in something, it's not a bad idea to take the profits. Even my General Motors, I look at this and think, it's a nice little trade here. I'm up 10% in this thing in the better part of a week. I mean, that's a big move. So now you got to think about, there's certain companies that I stick in there in the long-term portfolio, and you're like, I'm a believer in the long-term story here. AMD became one of those that I think the stock, I want to hold on to this for years. Then there's other ones, it's like, this just oversold, starting to show a little bit of life. I think we got a few weeks maybe where the story turns around here a bit. I'm a believer in GM long-term too. I think they're going to be a major player in EV. I'm just not sure that their time is now here or not. So there's some that have a shorter leash. Square would have a short leash with me as well. I do think there's, the techs are turning around. That's been a good one here too. All the stocks we've bought recently have, been pretty good, turnaround stories here, obviously. It's just, when the S&P is going up and obviously everything else going up, it just becomes easier on the long side. So everything we've bought recently has been going up just because the market's been going up. But I think you're just still in this market environment where it's prudent to take profits when you got them, because we know what happens. The stories turn in a hurry and then boom, 2-3 days, and it's like, where'd my profit go? And it's gone. So think about that, when you're trading some of these stocks. Just be careful chasing here. I know Tesla, it's like everybody's like, well, I missed it, and what a bigger problem is, people naturally look at this, traders, and say, well, this is silly. It's going to pull back eventually. I want to short this. I don't like shorting hot stories, right back to that shoot them in the back, don't shoot them in the face. When that thing's going to rocket ship mode, who knows where it ends? Yeah. Wait till it cools off. Wait till you get a candle to lean on. Wait till it looks like you've had the topping event. Then maybe try the short. I mean, NVIDIA, it had the topping event over $1 trillion market cap, over the 400. Then it came back down through the 400. Well, now you have a level to lean on. So if you're shorting it, if it gets back over 400, I would get the hell out. And maybe it is. I'm not saying I'm shorting NVIDIA. I'm just saying the setup is better on a short in NVIDIA than it is on Tesla right now. Maybe Tesla just pulls right back, and they do. And if you catch these turns, they can be really lucrative, but they're very dangerous here too. Yeah. So it's a dangerous game to short rocket ship mode.
100%. I think it's one of those trades, and I heard it mentioned in the chat, it's one of those trades that you can get stopped out maybe 20 times before you actually get the profits. Yeah. And then the key there is, can you get stopped out that much and still stay in it? The psychology in that trade is very difficult.
Or all the losses you're taking, maybe when you finally get it, they don't add up to how much you lost.
That's the truth there. And so just be careful with this. This could be the death by 1,000 cuts if you're trying to take that short up there, right? We'll see what happens.
And again, maybe, it feels like it could be the upside capitulation day for it, but it's hard to catch those turns. People thought that 2 days ago, and then boom, all of a sudden, we've got another headline here, and the thing's up $15 in your face, and you're like, what? I mean, NVIDIA, think about everybody trying to short it at 200 and 250 and 300. Then finally you get, the ridiculous upside gap when it gapped up $100. And then it continued for 3 more days after that before it actually topped out. So, and has it topped out? I mean, NVIDIA might just be pausing to go higher here once again. So it's tough to short these hot stories, and valuation does not matter when the story is hot. Valuation eventually matters. Valuation matters when the stories cool off. When the story is hot, valuation matters zero. Fundies don't matter when the story is hot.
We'll see what happens there. Let's move forward from NVIDIA, from DocuSign. They did beat on EPS and sales. Let's get to Adobe. I wanted to talk a little bit about Adobe. It's continuing hot here, as you guys see it. And Adobe shares were trading higher after the company announced new products and AI programs in Adobe Experience Cloud. Also, multiple firms increased their respective price target So another thing that I want to put on the radar is keep your eyes for more headlines to hit the tape, right? Adobe's right now having their Adobe Summit EMEA Digital Experience Conference, and it's still going on today. It's from the 8th and the 9th. So one thing that I would say is, as the last day of the event, did they just save the best for last? Might have to tune in.
The stock's been an unbelievable performer, and here's a stock that is now, really starting to move here. I mean, we're way off the all-time highs at $700, but is there room to keep going up from here? I think so. I think you got to be buying pullbacks on Adobe because you're so far off the all-time highs on this. Valuation still high, but I mean, it is on a lot of these stocks. Like I said, I'd love it back. Like I said this the other day, I'd love eventually for us to pull back to the 400 area. I just don't think you're going to get. Now you get an earnings report that goes the other way. Now you're gapping up into earnings. Can't chase, though. I still think you're buying it on dips, though.
Yeah, I think one thing to keep an eye out for is, man, Adobe's just getting started, I think, and it just got moving. And this is one that I at least was able to be on top of. Of course, didn't get the buy on that Thursday that we talked about it. We talked about a couple of stocks that day. We talked about Marvell. We talked about Adobe. That was a really nice day here on that Thursday, the 25th. And ever since then, I've been waiting for some type of pullback. I just can't get it. I was looking for the 400 this whole time. Like when it was pulling back right now, I was like, can it just get to 400? Can it get to 400? Nope. Already 450. And we'll see if this can continue pushing off. Like I said, they're still having the conference going on today. So maybe there's some more news to come. Keep your eyes out for Adobe. All right, let's get to another stock here that had interesting analyst rating. Let's go to Target here, of course, and Citigroup downgrading and lowering the price target here as they downgrade Target to neutral and lower price target to 130.
Here's the problem, and this is what I'm going to say. When the stocks are in these real hard downtrends, every time you get a little bit of a rally, there's another analyst downgrading it, and they listen, man. On the upside, sometimes they stop responding to upgrades. On the downside, they continue to respond to downgrades. And I mean, the story here is just really ice cold. So is the Target story over? No, Target's not over, but it's retail. Obviously, they had these issues that they're getting thrown in with this whole, pride thing going on and other things happening, which we're not going to comment on. But I'll just say the number of downgrades that this thing has had in the last couple of weeks is like, it's got to be 4 or 5 now. And they go down every day on them. So now you're going to re-challenge the lows in the move again. Stocks making new lows. You got to go. 130 had some support. It was starting to look a little perky, but so much overhead supply. It's so hard. And again, contrarians, I'm a contrarian at heart. At a certain point in time, I think, oh yeah, value's there. But, at a certain point in time too, value, just doesn't matter here at this point in time because the story is just so cold. So I wouldn't be surprised if it makes new lows again.
I wouldn't be surprised either. And I thought it was interesting. I think one thing that we could see is a split of the relationship. Normally, when I see discount stores going down, Walmart was actually having a really good day yesterday.
Yeah. Walmart.
So I think this is kind of like a little bit of a split of the relationship. Normally, I look at, if discount stores are getting hit, then maybe all of them are getting hit. But I don't think that's the story here in Walmart. And also Costco seems pretty strong. So these are two that are different kind of breeds now here that I'd be kind of keeping an eye out for. And if Target's going to keep going down and people are going to not go to Target even more, well, then Walmart should maybe continue seeing the lift, right? I mean, I like the monthly levels that we're going towards. Look at this monthly chart. I know Joe would probably want to point this out, so I'm going to point it out too. Look at this. And look how this 153, like right above here, 153.40, 153.66, 153.61. You just slightly got above here at 154. Last levels 154.35, 154.35. So let's see if we can get through this monthly high and start pushing in Walmart.
There's a huge disconnect here. You're absolutely correct here, Mitch. Dollar General, Dollar Tree, these stocks have been going down. Target, obviously. And then you got Walmart that's just holding up. Walmart is the play here now. I don't know if Walmart's eating their lunch, but Walmart isn't doing anything wrong. And maybe a lot of these other companies are doing stuff wrong here right now. So, again, I don't think I'm buying retail here right now. I'm just, there may be some turns. Like I said, I call the Macy's pretty well. But, I mean, these are just like oversold turns. This is the story is turning around here. No, I think it's going to be a tough second half for retail. I think that's what Target is telling you. I think there's a lot of the, obviously, I just think there's a lot of people who are going to have less money in the second half. So I just think tougher times for retail. I don't want to own retail stocks right now, besides Amazon.
All right, I'll keep an eye on Walmart. We'll see if it pushes higher in Costco. Another area that I did see kind of start getting a lift, and I'm wondering if we're missing the move, Dennis, especially more in the investment terms, right? We talk a lot about trading. This is kind of more of an investment that I've been thinking about is the airlines, right? I already sold mine for a little bit of a swing, and maybe it was a little bit early, but I'm looking at them now and they're just like kind of just slowly just grinding their way higher.
Yeah.
Now American Airlines to 15. And I feel like, we kind of may have already missed the kind of bottoming action there at 13s. But are the airlines going to start making a move?
I have a bunch of trading positions, and I'm in 3 airlines day trades.
Oh, I would pick
up,
I would
so
pick
I
the
almost
one
can't
area.
talk about any of them because I'm in them all.
What about Love? Are you in Love?
I'm not in Love. That's
all right,
what I'm not in. But
I've been watching
LUV,
to see if maybe this will reverse.
I do think there's a trade here for the air. Like LUV looks okay. That looks okay. And I think if people are spending money, they're still spending money on doing things and going places. So I don't mind the LUV chart. Maybe you want to go bottom fishing there. What's the PE on LUV?
All right.
The one thing we know, like UAL, is really low. The PE. What's the LUV PE? Let's go check it out. A little fun.
All right. I'm seeing Ford at 10.
Yeah, I mean they're not bad. I mean UAL I think was 6 or 7. LUV, it's not bad. Oh, I just wish. Again, I think there's an opportunity here where we've come up so much. Forward, looking at around 10. Obviously, that's on projections here. I kind of want to buy it, LUV. I think it's sleepy. I think it's kind of trying to hook a little bit here. It's lagged, though, tremendously to some of the other airlines. And, I want to kind of know why that is the case as well. But I think there's maybe an opportunity there. I'm on the fence. Talk me into it.
PK says, Love cancels flight every major holiday. How can I love them?
Maybe that's why it lags. I can't get it together. It used to be the best run airline. That was
right. It was like known for like the best customer service, and that they always got your back, and fly with Southwest. And man, you have 3 computer problems, and there you go. You really quickly destroy the outlook on the stock. That's an interesting one. All right. I'll go to this one. This is not, the biggest name, but let's go to Braze here, BRZE, as they reported their earnings. They're getting a little bit of a lift here. This is they beat on EPS here, a loss of 13 cents, beat the loss of 18-cent estimate. Sales of 101.78 million, beat the 100.44 million estimate. Braze sees Q2 EPS at a loss of 13 and a loss of 14 cents versus a loss of 16-cent estimate. So a little bit better on their revenue EPS outlook than what was expected here. That's giving them a little bit of lift. If you guys don't know about Braze, I also grabbed our description here from Benzinga Pro. Of course, you guys always check Benzinga Pro for these nice descriptions. They're right at the bottom of our detail page. Braze Inc. is a customer engagement platform that powers customer-centric interactions between consumers and brands, right? The company provides solutions for retail, e-commerce, media, entertainment, financial services, and travel and hospitality-related industries. So here we see it. It's kind of a little mid-cap stock. It's in the software. I was waiting for the AI mention. I didn't see it specifically in the headlines. Maybe you guys were reading kind of that earnings call or kind of caught the conference. This looks like it wants 40, but it also kind of already kind of got there pretty close there. It went to 39.74. So we'll look to see if it can hold on today.
I know nothing about this company, so I'll just skip it.
No worries. I'll just give it a little bit of a look. It was one of the leading stocks right now, up about 11.96. So not a bad move there.
One more stock before we get.
What do you want to talk about,
Detrick
Dennis?
Coming on. Let's talk Airbnb. Big move here. I'm long Airbnb. You know what I find, and is often the opportunity when these things get some S&P moves, like they get moved out, or a lot of times these are moved for index reasons and not the fundamental reasons. I had the pullback here the other day off of that, and now all of a sudden it pops right back here. I think Needham raising the price target here. It's been sleepy for a bit. I bought the dip off the earnings. It's starting to try. It needs to get up over 120. That's the big challenge it's doing here this morning. So it's right at resistance. If you're going to try to short it off that level, I won't argue with you. You got your level 120.16. But if you could get above 120, then it starts to think about filling the earnings gap. And then you start to think about, oh, maybe there's a catch-up trade here too, because Airbnb has lagged, a lot of the other tech comebacks here. I like Airbnb. I'm long it. Also, Etsy is another one that I believe is getting a PT raise here today. I'm not sure, actually. I didn't look at the headline, but it's up $3.44. I'm assuming some analyst chimed in somewhere. $91. You get above that, which we're trying to right now. It's been in such a wicked downtrend. I'm just looking at some of these, loved stocks from 2021 that have been in wicked downtrends that haven't really, went yet. And you wonder, just a couple analysts can't turn these around. So Airbnb and Etsy, just looking at potential, turnarounds here and maybe catch-up trades.
All right, I'll look at it one at a time, right? We'll do Airbnb first. So one thing that I would just clearly point out is the undercut and rally type of trade here that you see. And so a lot of times when we cut support, we're going to get that spike in volume, right? But I also look to see if there's another spike in volume a day or two afterwards. And so you can see it on that first day. We cut through the support to the left here. And then now we start going towards a lower level, but there is more volume here around the bottoming action and about 3 or 4 rotations here. And then a nice reversal from that bottom. So it does look like we're starting to get some buyers to come in here. I like that it held that 115 pullback now. We've seen 113.58 yesterday, 113.98. So I'll look to see if it can hold 114 and make that move up. I really like the upper trend line too on this one. So everything looks good here. The only question, will it hold? I too have been looking at a big line for a long time. I actually drew this out when did I draw this? In May 13 of 2022. I've been waiting for Airbnb to kind of cross that line and hold. It did have that big pop. I got caught on the recent drop. So I don't know if I'm going to join the party this time, Dennis, but I wish you the best there on that Airbnb.
Thank you.
Doesn't look too bad. All right. And the other one, of course, Etsy. That one's a little bit of a harder challenge there for me, because if we're expecting kind of a recession and consumer pullback, is this really where I want to be looking at stuff? Maybe not, but who knows? It is bottoming out there. A lot of volume similar and volume coming in right around that bottoming action. We'll see what happens there in Etsy. All right, let's get out of that conversation. Of course, we're going to get to our guest today. You guys smashed the like. We got none other than the Stat Man. Let's get to it. Ryan Detrick, how we doing? CarsonGroup. Let's get right to it. Chief Market Strategist and none other than the Stat Man. How are we doing today?
Good morning, guys. How we doing?
He's got notes. Look, he's got his notes. He's looking through his notes. This guy
he's ready.
He's so prepared.
I don't know. You guys hear me all right?
Yeah, we hear you well.
Got you clear.
So I turned my computer on this morning, literally 15 minutes ago.
Yeah.
And it does this big update.
Oh no.
I'm thinking I gotta do this on the phone. So I put together some slides, guys, maybe in about 1 minute. so let's. I mean, they're good. I think.
Let's just chat overall market.
Was it Windows? Was Windows doing the update? Is that what it was?
It was like a work thing. I don't really know what in the world was going on, but I
hate that.
It's
all the Mac guys yelling in the background.
Exactly.
Updates. You're like getting ready to make trades, and your computer goes into update mode, and you're like, "What the hell, man? I'm trying to make trades. There's no updates during the day."
It wasn't good. It wasn't good. But I'm here now, and you guys see the new bowl? You see that?
Yeah.
Oh, yes.
All right.
Yes.
Nice. All right, let's get rolling. So again, thanks for having me back. Happy Friday. We're getting somewhere. So as everyone has heard by now, S&P up 20% off the lows. And I shared this. It's been out there. Maybe people have already seen it, but let's talk about it for a minute. The idea that October was probably the lows. I've been saying that for a while, looking for higher equity prices, specifically CarsonGroup here. So it is what it is. When you're 20% off the lows, do you just go right back to new lows? It'd be pretty rare, right? A couple times in 2001, we did that. And then in the financial crisis, that happened. Rest of the time, though, those lows are it when you're up 20%. I don't think that's too surprising. But what got me was 12 months later. You see it right there. Stocks up 17.7% on average a year after you're up 20%. So I'd be starting the clock right now. Who knows if we're up 18% a year from now. But I think it's just kind of some confirmation that, being up a good deal isn't a bad thing. But the thing that's unique about it, this took a while, right? This took a long time. A lot of these, you can see some of these took 12 days, 10 days, 11 days, right? This one took a long time to get up to 20% over 6 months or so, but still we're there, and that's impressive, I think. The other idea, I just wrote about this on a blog on CarsonGroup.com. The VIX is low. The VIX is low. We're hearing that a lot. I'm asking the question. I don't know the answer. Just asking the question: are we in a new regime? Are we in a new low volatility regime? Because these things last for years. I've shared this chart for years now, and you can see it. It is what it is, right? So it's 15 low. The VIX has averaged 19.7 since 1990. Okay, so 20 is not. The 20 is average, I guess, but there's no such thing as averages in this industry if you do it long enough. I think we know that. So just the idea that, hey, we had a couple of years of a high VIX. Are we entering one of those yellow regimes, which tend to be low volatility, but as most of us know, tend to also be pretty good bull markets? I think that's the camp I'm in, but we'll see. So something to think about.
Go back to that chart.
Let's go back to it.
Yep, here we go, Dennis, stuff here too. Fabulous chart here, Ryan, just to put it in perspective. And I think people, look how many years that we were under 20 from 2012, 2013, 2014, 2015. We spiked up a couple of times there, but the majority of that yellow box is under 20. So people naturally think, oh, the VIX should be at 30. That's not its home. Like you said, its average is 19.6. And sometimes you go into these periods, and I remember 2018 when that thing went under 10. I remember that. And you don't want that environment, really, as a trader. As an investor, you might like it because this is a slow, steady climb, but as a trader, it is boring. We're scrambling to talk about stuff. There's not a lot of action. I mean, 20 feels comfortable. Okay, we got good trading action. We got good stuff. 30 is like we're heads on a swivel. We don't know what's going on. Everything's moving. Macro stories matter. When that thing's down at like that 11, 12, it is slow for traders. So there could be a period here because we've had look, from 98 to 2003, I had this elevated period. That was the dot-com bubble, and the dot-com bubble burst. And then the financial crisis was 09, 10, and 11. And then obviously with the COVID thing going on, and then, recently this regional bank crisis and, driving us up here. But I just think traders should be prepared that this low VIX period could last for a lot longer than we think. I don't know if it's lasting 7 or 8 years like the last time, but maybe we're just getting started with the low VIX period.
Great points. And, maybe someone thought that back in 2021, you can see we kind of popped below and popped above, but still just something to think about, I think. Great points there, Dennis. So, the other than TGIF, right? It's Friday. This is an annualized basis, and I know the year isn't over. I get all that, but I took a look. I think the average Friday this year is up 0.42%. So you multiply that by 252, and you get an annualized basis of 105. That's the best Friday we've ever seen. I get it. It's probably going to come back down. But just, guys, some of the best years ever, 75, you got the mid-90s, 2013, 2019, all were some of the best years ever on a Friday. And my thinking is, sure, they were good years, so most days are probably higher. But there may be something to this that you're willing to hold over the weekend. You're probably pretty comfortable, pretty confident. So when you see strength on a Friday, what I've found here is those are some of the very best years we've ever seen. And we have this literally the best year ever for a Friday. It's probably going to come back a little bit. I get it. But still, just something else little to think about. We'll see what happens this Friday. But TGIF and the last couple Thursdays have been strong too, right? So Thursdays and Fridays this year are like the two best days. So people are willing to kind of hold over the weekend. And we all remember COVID in 2008, 2009. You get to Friday about 3 p.m. Eastern time, and that's when the roller coaster would start, usually some weakness. So we're not seeing that. Again, it's kind of a change and shift. I think I've shared this one with you guys every time for the last year or so. The idea that stocks are up a lot this quarter, last quarter, and the quarter before shouldn't be overly surprising because this is the 4-year presidential cycle. These are literally the best 3 quarters out of the 4-year presidential cycle. So the fact we're 20% off the lows during this period, I think it'd be more of a surprise if we weren't. Just a couple more. We'll skip that one. I think I used those last time. Just the idea that new highs versus new lows are getting better. I think I've got all U.S. stocks here. I've got NYSE and then NASDAQ at the bottom. And we've seen this pop positive before and hasn't been necessarily a overall buy signal. I'm fully aware. But again, just some changes there. I think potentially with more stocks going higher, which we know, which is next one, smalls. We've liked smalls. Yes, since March, it's been rough. What happened Friday, I think, is a big deal. And
yes,
that's right. 339,000 jobs. The idea that there's no recession. I mean, we've been saying CarsonGroup for the whole time there's no recession. People look at us like we're crazy, but the data that we're looking at just doesn't look like a recession. Slow down, sure. Now the realization there's no recession. We like small caps. We do like financials a lot. We like energy. We like some of those cyclical areas. Yes, large cap tech did great. We think second half of this year it's going to broaden out, like a lot of people on TV are saying now. We've been saying it for a while. So we are overweight smalls. The most out of consensus bet we've got in the models we run for our more than 350 Carson advisors is a little bit overweight smalls. skip that one. Okay, maybe this will be my last one, then we can chat a little bit. This is heavyweight truck sales. I mean, it is what it is. I'm no economist. I play one on TV, but that's been pretty strong. When you see that roll over, that's when we've had previous times right before recessions. You don't talk about a leading indicator. People buying heavy trucks. I'm not so sure if that's bearish. Yes, that's near the peak where it's been before when it's rolled over. So just some context there. But overall, we still remain quite optimistic the economy is going to avoid a recession, even though people keep telling us for a while that it's going to happen. So those are the comments.
And I mean, we've been in this bear camp here last year, and I rolled over to the neutral camp at the beginning of the year because I'm like, I can't fight the tape anymore. I'm a trader, so I changed my opinion. And and since we've broken out here in the last week in the IWM, I think Friday was a big deal. And Friday is really when the bulls started to take control, because the IWM has been just lagging, and the bears have gravitated to that thesis that, hey, yeah, you got the technology stocks going, but look at the banks and look at, all these other companies that just aren't participating. Well, you know what happened a week ago? They all started participating.
Right.
Here. So I think that punched a lot of holes in the bear thesis. And as a trader, you've got to respect, what you're seeing on the tape. Your opinion doesn't matter. It's what's actually happening here. And, what we're seeing now is that dips are getting bought not only on those technology stocks, but it's getting bought on other sectors as well. So we're seeing, broad-based rallies starting here, where a lot of those laggards are starting to pick it up here too. And that's not good news for the bears.
No, I fully agree. I mean, here's one more. I have shared it before, but I think it's important to note. It's not abnormal during a midterm year to have trouble. You can see, your average midterm year is up like 6 or 7% on average. We had a bear market, 25%. We know that. Bottomed in October. 6 of the last 17 bear markets bottomed in October, many of them in midterm years. We were talking about this outwardly at CarsonGroup. I found on October 19th, I actually wrote a blog, said the bottom is in. I didn't even remember writing it. Someone shared it with me. So, we've been talking for a while. We thought October were the lows, but a 1 year off your lows, you see it here, up 32% on average, up 100% of the time. Now, does that mean, up 20% right now? We'll be up 30%, 32% by October 12th. I don't think so. But again, these are just these concepts we've been sharing to point out that these cycles tend to work. And if the economy can avoid a recession like we think it can, higher stocks shouldn't be a surprise. We moved to overweight equities the last week or second week of December. And we got some weird looks when we did it. I'll just say that. And we've got some
great
weird looks along the way. But the models we run, the money we run, it's had a really good year because we moved overweight when a lot of people thought we were crazy. And now I see still just this week I saw some big shops kind of lower their guidance and lower their S&P targets and cut S&P. Anyway, long story short, we're still overweight equities, and we still think the cyclicals will do better the second half of the year.
Well, we can definitely see that this cycle has gotten that boost. And I think a lot of that has come from the big AI bubble, right, that we're living right now. And how big can this bubble really get? And how far could it drive us, Ryan? What are you thinking?
Well, I don't know if it's a bubble or not, but I think there's a lot of good news with it. You think about last year, right? What happened? I mean, geez, we can go through the list, right? 40-year highs in inflation, aggressive Fed, China, lockdown, shutdown, manufacturing recession, housing depression, terrible war. All those things were headwinds. A lot of them are tailwinds now. Now we're getting things like the AI explosion in good news and the potential that has. We weren't seeing good news a year ago. So those are just things that add up to it. Maybe near term is some, maybe it would be something if tech did amazing and then tech kind of maybe started to lag a little bit here with all this AI talk, and it goes to the other areas, which what we've seen, like you said, the past week or two. But I think there's a lot of potential there. And then one more thing, talking about potential, the Fed, we'll use the F word for a minute here, the Fed. What I've shared this maybe, I think last time with you guys, but this is the last 10 times the Fed stopped hiking. Now, maybe they've got one more hike coming. I don't know. That's what we're hearing, right? But we'll see. But whenever they stop, a year later, higher 8 out of 10 times, only 81. And then what was the other one? 2000. You were negative a year after they stopped cutting. After they stopped hiking. After they stopped hiking. When you need to worry, I talk about this a lot. When you need the words when they start cutting again. We don't see any cuts. We've been in that camp for a while because the economy's in pretty good footing, in our opinion. So just when you lay it all out there, we just still think it makes sense that this upward trajectory continues. I did a study on the first 100 days. I didn't put it in here, and I honestly forget the numbers, but it's similar to these other things. When you're up a lot the first 100 days, take a wild guess what happens to the rest of the year. You're up like 10% on average, even after a good start to the first 100 days. So it's some trend following things, yes, but when you put the whole macro picture together, it just still makes sense for us to be overweight equities here.
Yeah, you mentioned about the heavyweight vehicles, and today we get the news, of course, General Motors and Tesla building up that supercharger infrastructure.
Yeah.
And of course, we know that Tesla's going to be coming out soon with the Cybertruck. Is this kind of a trend that could maybe just take off here with heavyweight trucks?
Yeah, I think it sure could. I mean, I don't, this is not a recommendation. What's Tesla up 10 days in a row, 11 days in a row? I saw
Yeah,
that.
man,
unbelievable.
So clearly something's
running.
going on there. And I know Tesla's part of consumer discretionary, and that's been a strong, very strong group with some, it's a big chunk of it, right? So yeah, I think again, those are just different things that, last year, if there was good news, we just swept it under the rug and ignored it. This year, we're getting some positive news. The other one, guys, I mean, I talked about this before, but last year stocks are down 20%. It was the worst year for bonds since like George Washington was the president, according to our friends at Ned Davis Research. 60-40 portfolio, worst ever. We know, we lived all that. But the idea that you could be down 2 years in a row is so rare, right? The Great Depression, 73, 74, 3 years during the tech bubble. We just said, it'd be odd to be down this year also. And when your median strategist, according to Bloomberg, 25 of them, said negative stocks this year, that was in late December, right? I mean, that's another reason we were taking the other side of all this. It just made sense with that much negativity, we could spike. Now, Dennis, I want to ask you one, if that's all right. The AAII had a big surge, right? And I haven't had, honestly, a chance to look into it. But now, finally, the bulls noticed stocks are going up. What do you think about the AAII big surge we saw yesterday or this week?
Which one? Which stock are you talking about?
The AAII survey, the sentiment survey.
Oh gosh,
big jump in
no, I don't even follow all those surveys.
Well, never mind. Well, okay, I'll just say this.
Give me the details. Give me the details. I'll get my thoughts.
Yeah. Well, we finally saw a big jump in bulls in one of the sentiment surveys. And I just think it's not too surprising. So maybe there's something there in a near term, but we have had historically low sentiment polls all year. So but finally people are realizing, I guess stocks are going up.
I think it's turned, like I've been talking. I even tweeted with you a couple times on this. Yep. I'm like, I feel like my Twitter has, and I use my own Twitter as my own survey, and maybe it's, biased because they show you what you want to see to a certain extent. But I feel like there's just a lot less bearishness out there in the last couple of weeks. It's like, even me, like if you go back to 2 months ago, I was sitting in the market neutral camp, and I'm like, I think we could go sideways for a long time here and just be in a prolonged sideways period. But I'm not getting on this bull camp here because it doesn't make any sense. I've kind of swung over too. So, I mean, I just think a lot of the bears have thrown in the towel here. And that's not good news, really, overall, if you're trying to look at it as a contraindicator here, because if everybody does get on the bull camp here, that's where I actually do get a pullback here, because it seems like the last bear is like when we lose like the Peter Schiffs and stuff and they start getting bullish, we know we're in trouble here. So I've
is he allowed to get bullish? I don't think he's allowed to.
But I feel like my Twitter,
then we're out. Yeah, I hear.
Yeah, I feel like my Twitter is a lot less bearish than it was 3 or 4 months ago. So everybody's expecting, we had a good January, but it's going to pull back. And some stocks did, and some stocks didn't participate. But I feel like it's kind of moved here too. So I don't know what that means. I'm cautiously bullish here right now because I still think there is some issues. Rates keep going up here. I cannot believe that it doesn't hit the economy, but it just shows how resilient this consumer is. And this consumer will find a way to spend even if they have less money.
No, exactly. And the employment backdrop strong. One final comment, probably getting close to the end here. I did something called the Carson Composite. It looks at your average S&P 500 year, third year of a president, pre-election years, when you're up 5% in January. There's one more, there's a fifth one. I can't remember off the top of my head, but you smush all these together, right, and see what the average year looks like. June and July are pretty strong when you do that. Now, yes, you get your August peak, you get your weakness in August, September, October, the standard seasonal weakness. I wouldn't be shocked at all. We had a little more surprise summer rally, have that standard peak, weakness in the fall, and then kind of a surge potentially higher as well. So a little more rally here, I think. Get the bulls a little too excited, and then we probably have a well-deserved break, which will be fine. August, September, October, we'll talk about it then. But still up a year from now, we think stocks will be a good deal higher, still where we are at the Carson Investment Research Team.
Ryan Detrick, Chief Market Strategist, CarsonGroup. Appreciate you like always.
Yeah, great calls, man. Ryan. I mean, Ryan was in the bull camp before everybody else, so we're going to give Ryan some props here because he's being proven correct.
Yeah, I took a lot of heat for it, I'll tell you.
Oh, man. For me too, Ryan. I gave you heat on this show.
Let's
go back. I gave you some heat too.
It's the job. It's the job.
Hey,
I mean, but
big shoulders over here, Ryan Detrick.
Yeah, but again, if you guys could see me at 8:33 putting those slides together, knowing I had to be with you in 2 minutes.
Look how prepared he gets in 2 minutes. This guy is just a machine. My guy.
Yeah. Well, what a time for a computer update, but I'm glad I made it. I'll see you guys.
Check him out. Give him a good follow. Have a good one, Ryan.
Take care. Have a good weekend. Bye-bye.
All right, guys. I do want to let you guys know on a little bit of a giveaway that we're doing right now. And I know that, I know there's some Taylor Swift fans out there right now. So did you know that Benzinga loves to give back? And so what we're doing right now is a way of giving back not only 1, but 2 tickets to see Taylor Swift's play this weekend at Ford Field in Detroit. So if you guys want to check that out, of course, especially our Detroit, Michigan fans out there, the home of Benzinga, all you need to do is go to our Instagram post. in the chat. I threw up the link there. Follow the instructions. We're going to be announcing the winner today at 12 p.m. Eastern. So get those comments in to have your chance to win, of course, not one, but 2 Taylor Swift tickets there this weekend, Ford Field, here, home of Michigan.
Those
Benzinga,
tickets are probably
baby.
worth a hell of a lot of money here too, because I heard like Taylor Swift tickets are like thousands of dollars there. So it isn't like, it's crazy. I like my one friend was just saying, it's like $2,000 or $3,000 some of these tickets. I'm like, for Taylor Swift? Like, holy cow. I guess she's got the draw though.
Hey, you know how it is. All right, let's go underneath the hood. Let's see what the gappers are saying. If you guys got a stock, this is just like ticker time. Throw it up there. We'll take a look. Let's get to it. TradeZero. All right, team, let's take a look and see what we see. And of course, let's take a look at the up gap first. And of course, Adobe taking lead there. We've already talked about that, but Netflix right back up. I think Dennis has been talking about this one for a while now.
Yeah.
Dennis, can Netflix just keep on going?
I think so. And I'm bullish Netflix, not long the stock, but bullish. And I wish, I still had my positions, was hoping for a pullback to buy. The stock just keeps on marching, doing everything right. This streaming, their subscribers, when they report next quarter, the subscribers are going to go way up because of this crackdown, I think. I think Netflix is going to see $500 here, and I think it's going to see it probably sometime this summer. I'm a buyer of pullbacks in Netflix. Trouble is there ain't a lot of pullbacks. I guess he got one yesterday or 2 days ago.
All right, we'll see what happens there in Netflix. Let's
that
take a look
SMCI.
Yeah, that's exactly what I was going to.
Go. That thing doesn't pull back at all.
I'll name it a Christian from Hertz favorite because he's definitely been in this one and just been killing it and watching this one for a while now.
100, 150, 200, 250. You know what? Kenny Glick says stocks go from 100 to 150 to 200 to 250. Usually go to 300. That's maybe where it's going to head.
We'll see. It's definitely climbing high here. I would look for pullbacks maybe towards around the 260 spot. I see a lot of resistance there around the 15-minute. Yesterday, prior range high, and then also on the 7th prior range high. So I would look for pullbacks because that's the way I go about a stock like this. But that's kind of the level that I would look at, around the 260 level. We'll see what happens there. And super micro computers. All right, let's keep going. Of course, this is an interesting one. CRISPR getting a little bit of a lift today. Kathy Wood favorite, sideways right now. Let's take a look at the headline there. CRSP. Let's see what we got. Looks like we're getting an FDA accepted treatment here for SCD. So looks like there's some therapeutics announcement today. So keep your eyes on that. I would look a little bit deeper in it, especially if you're an investor in CRISPR. But now you guys see it. It's trying to make its move. Doesn't look too bad. I see the little trend line here. I see the support where we came from. We are right off of support. So I'm thinking buyers were definitely watching this level. There you guys see it. Now start to push. Can it get through kind of the 69.50s towards 71? We do have a high on the 23rd of 72. All right. Let's keep it going. Let's go to the next one there. Let's get Airbnb. We already talked about that.
Let's go to the down filter.
Yeah, let's go take a look at the down. All right, let's go really quickly into the down. We see
Meta. The opposite Tesla, the bearish Tesla, because people can't short them, so they got to buy the Tesla Q to go short.
All right, well, there is here an interesting one, Meta, and this is one that I'm keeping an eye on. I know that they're going to release their Quest 3, but does it continue lifting here, right? I mean, this has been a huge run. Of course, Apple came out with their goggles, but super expensive, right? Can this continue lifting here? What are you thinking about Meta?
Well, I just think a lot of these are weak here today because Tesla is so strong, and those indexers with the QQQ only up $1. They got to sell something else. So they go pick on. You look, Microsoft is down, Amazon is down, Google was trading down. It just turned around actually, but I think a lot of this is just ETF rotations there. When Tesla's that strong, up 6%. They actually sell other stocks to make up the difference. So I think Meta's actually the victim of the Tesla strength. People think I'm nuts for that, but this is the ETF effects. This is what actually happens.
Well, we'll see what happens with these stocks.
AMD popping
continue
again.
Lifting. AMD?
Yeah, AMD actually. I don't think it was in the down filter there. I was just brought it up there, but it's popping. I didn't notice it was trading up here.
I really like these levels. I mean, look at the daily level, right? I mean, this is going to be a 5-star level now. You're talking right around that
I got the
117,
AMD as the core
25.
position. I actually put even my kids' RESP. So that's literally looking for the 6-year-old and the 8-year-old for university. I put half of the money in the RESP and AMD, half of it, 50% in AMD. It's actually, and that was
At
back
these
when
levels?
it was like that was back when it was 93.
Okay. Hey,
So,
but I'll tell you one thing, not a bad option
I'm just
there at
saying,
93.
10 years from now, I think AMD is still a major player here. So I'm like,
I
and
do
that
think
RESP, I just like keep it. It's 100% invest. I just keep it like it's education. You know, I like every time I contribute to it every year. I think it's like you can contribute $2,500 each kid every year in Canada there, and the government matches it, throws another 500. So it gets like 6,000 a year. So I throw the 6,000, $5,000 and $1,000 from the government. I basically just buy a stock. So I had a little bit of cash in there that I had built up. I had, in there, but AMD. I've got AMD and LTHM, I think, are two core holdings in there, but AMD is like half of it, 50% of my kits RESP.
We'll see what happens on that one. I can't blame you for putting it in there. Of course, it's in every pretty console nowadays, and I can't see AMD turning around anytime soon. Like always, you guys can check out TradeZero for an extensive inventory locate. Just threw up the link there in the chat. Smash the like button. Let's keep it going here, team. We're going to start wrapping it up. I do have a special announcement that I want to tell you guys about. We're going to go ahead and talk about it here in just a second here. But definitely let's pull down TradeZero. Want to let you guys know about an exclusive interview that we're going to be doing right here on Monday, of course. Don't want to miss it here. I'm excited to go ahead and talk all about it. Get ready for the next big leap, of course. You guys smash the like button. We are going to be having on Monday. Don't want you guys to miss it. Join us for the exclusive interview of Todd Asgard, the head of AI business at Qualcomm, as he reveals the secrets behind the groundbreaking AI innovations. Discover how Qualcomm is reshaping industries like autonomous vehicles, cutting-edge robotics, and supercharged mobile experiences. But that's not all. We will give you inside look at the next AI stock that could skyrocket your portfolio. Don't miss this chance to stay ahead of the curve and secure your future in the fast-paced world of AI. Tune in, of course, on PreMarket Prep, Monday, June 12th, 9 a.m. Eastern, for this electrifying interview with Zad Asgard, the visionary driving Qualcomm AI's revolution. Catch the next big AI stock only on Benzinga. See you there, guys. Definitely. It's an exciting moment for us. Of course, a big company, and I'm excited to take a deeper look into, of course, Qualcomm's AI business. It's definitely something that I'm keeping a close eye. I've been seeing the stock looking pretty well, so I'm excited to get into that interview. Of course, that's going to be run by Chris Ketchy, so a shout out to him, and hit the like button for that, team. Don't miss it. Monday, 9 a.m. Eastern, right here, PreMarket Prep. All right, last comments for the day,
That's
Dennis.
pretty much it for me. I mean, we're in this market here where dips are getting bought on stuff. You just got to respect that. And it's like, not saying the blind squirrel gets the nut here every time, but it seems like on these dips, if you're buying the dip more often than not, you're happy that you did it a couple days later here. So I just think we're still in this market environment here where bulls are in control right now. The rug can get pulled at any time, and as traders, we always have to be ready to change our opinions here. But I mean, that IWM participation, to Ryan's points here, I mean, we're starting to just see broad-based rally here, which is good news for the markets. Now again, we've got to be cautious. There's lots of things to worry about. That CPI number next week scares me. So I mean, we're going to have CPI on Tuesday. How is that going to look? I kind of feel like prices are starting to tick higher again. I'm feeling it, but maybe that's a selective perception on my part. Let's see what the CPI number shows.
Right, we'll take a look. Of course, that comes next week. But like always, you guys can keep up with Dennis Dick, Triple D Trader, and you guys saw him on the shirt today. Dennis, show me that shirt one more time.
Yeah, we'll say
my man.
We'll have Joel back Monday.
Joel will be back,
so we wore the short here once again. Joel says, "Have a good weekend. Enjoy the weekend. Stay out of the smoke."
And watch those pony races.
Oh, yeah. Joel,
have a good one, Dennis. Take care, my friend. We'll see you next time. Of course, he'll be back on Monday. You guys smash the like. Keep up with Triple D Trader. Now to get you guys over to live trading. And, of course, I do want to let you guys know Had a monster trade yesterday in ExxonMobil. Excited to bounce back in the prop account. Take a look into Mumu, see what I can do with the small account challenge. That's been going great. Almost up 20% on that account. Going to keep pushing forward. You guys smash the like for today's pre-market prep. Thank you, Ryan Detrick of CarsonGroup. And of course, I hope you guys enjoyed it. Give us some feedback. What are you going to see more or less of right here on pre-market prep? We're always here to improve the show. You can reach out to me, Mitch at benzinga.com. Hit it up, of course, in the comments below. Also, if you have any feedback, we'll see you next time. Hit the like button. And don't miss us this weekend. We'll do another book club on Sunday, the last one on Sunday. Going to be shifting it over to the weekdays. So if you want to join a book club and really up your skills, hit that link right now. And I'll see you guys over on live trading. That's starting up right now. And don't miss it, of course, the exclusive interview right here, only on Benzinga. See you guys there for Qualcomm on Monday. Smash the like button. We got to keep it going right here on Benzinga.